what we do and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Tuesday, 20th day of August, 2019. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. I'm going to put up a chart of, let's see, how about the Russell E-mini Futures. Sometimes when people say, I want to trade the E-mini, they think the only E-mini is the S&P 500, and that is the big daddy, the bellwether. But the NASDAQ, the Dow, and the Russell, those are E-mini contracts as well, 1/5 the size of the full-size contract. And the micro, which you may be familiar with, that's 1/10 the size of the mini. And again, the mini is 1/5 the size of the full contract. So, anyway, glad you're here. I do have the chart up. If you cannot see that chart, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, if you still want to join the show, and you should, point your browser, any internet connected browser, to youtube.com/CFRN/live. There you will find a real-time live simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay. This is a Russell swing trade from last week. We had a trigger at 1483, hit the first target on that first trigger, and we then came a little bit shy of the final target at 1460. Now, a couple things. One, this is not your father's swing trader, and we don't necessarily expect a swing trade alert to go all the way to the final target. It can, it may, it often will, but our swing trades are more about creating multiple opportunities to take profit out of the market. Mark Douglas, in Trading in the Zone, he talked about the importance of a trader learning to pay themselves as the market makes money available. Now, that becomes a simpler process once you've graduated into multiple contracts. Okay, I won't go too deep into that right now, but with the micro contract, margins, when you hold an order open from, or a trade open from one session to the next, and let me give you an example. If I were to enter a trade right now, long or short, I have access to, of course, to the intraday margins, which on the indices is $500 per contract traded. Now, if I close that trade out before the end of the session and then reopen a new trade tonight after 6 p.m. Eastern, when Globex opens, then again, I'm on reduced margins, because tonight at 6 p.m. Eastern, that begins the Wednesday session. So going back to yesterday, the Monday session, at 6 p.m. Eastern last night, it became the Tuesday session. So even though it might be dark outside, if you enter a trade after the Globex open, 6 p.m. Eastern, that is part of the day session, even though you're trading overnight. Now, to hold an S&P E-mini open from one session to the next, which swing trades often will require, the margin for that is $6,000 and change. Using the micro contract, because it's 1/10 the size of a standard E-mini, the overnight margin are, I don't even like the term overnight because that's misleading, but when you hold from one session to the next on the micro contract, because it's 1/10 the size, instead of it being $6,000, it's $600. So I want to encourage those of you who are looking into the swing trader product, you're looking into embracing swing trading as part of your overall trader makeup, have a good look at the micros. In fact, you could call and speak with Bert, 866-928-3310. Bert is very familiar with the micro contracts. He helped me to understand why this new offering from the CME could in fact be very beneficial to traders, especially those with smaller accounts just getting started. When you're in a swing trade like this and you are trading multiple contracts, you might scale out at the first target. When you see price putting in this double bottom, you might very well scale out of another contract. Now, important prices, important areas are almost always tested. So look what happened here. We triggered at 1483. We hit the first target. We put in a swing low down at 1464 half. Price almost triggers a second time, but it remembers it hasn't finished the first assignment, so it dashes down hits the final target at 1460, which is a 23-point move at $50 per point, is $1,150 per contract traded. After touching that final target, it then beats feet back up to the trigger, and you'll see it gets just a tad above it. Tad is a technical term. 1483, the swing high of this candle, 1485, so that puts you back above the trigger. We trigger a second time, and this one takes us straight down to that final target at 1460. So 2 trading opportunities from one alert. This is not uncommon, not unusual. It happens all the time. I had one up here yesterday. Here's I think it was on the same day that I put out this Russell swing trade. And let me move this stuff. You can see 25-point target, triggered once, triggered twice, triggered 3 times. Back to that Russell. In the alert, I mentioned that the lowest weekly trading zone below this alert is 1455/56. Of course, that is a weekly trading zone from last week. So if I plot that onto the chart, $14.56. Now this transpired, was it last Wednesday, I believe, but keep in mind that this weekly trading zone was given to all partners and passport holders the previous Monday morning at 6:15 a.m. Eastern. So when price came down, triggered, hit the first target, hit the final target, triggered again, hit the final target again. The fact that when it got to that weekly zone at 1455/56, the fact that it turned around and headed north honestly came as no surprise, because since December 14th of 2009, when we first published the zones, we've understood and taught that when price approaches a weekly trading zone from above, we expect it to be good support till it isn't. And by all definitions, that certainly looks to me like good support. Okay? All right. We'll go through all of the alerts from last night, both Concierge and Logic 247. We've got answers to all of your questions. All you have to do is put them into the chat box. Learning how to trade is not a spectator sport. If you're going to succeed, if you're going to actually learn how to trade, you're going to have to get involved. You're going to have to roll up your sleeves. You're going to have to exit your comfort zone. And bottom line is you're going to have to ask questions, okay? Whenever you ask a question, there's no question too simple or too basic. Anything that you don't fully understand, that doesn't seem to be completely logical to you, that is going to become an obstacle to you finding your level of success in trading, whatever that might be. When you type something into the chat box here, no one sees what you type except myself, Michael, and Valerie, and in no way are we here to judge you. We're here to try to help. Unfortunately, until you put that question in the chat box, and if it's on your mind, it's probably on other people's mind. So you're not only doing yourself a favor when you ask the question, you're doing everyone else on the trial a favor as well. So be nice to your neighbor. Ask lots of questions.
There's one in there right now.
I'm sorry?
I said there's one in there right now.
All right. How many alerts will send out for the customers daily? Mahmoud, that depends upon market conditions. 2 weeks ago, we had 100 alerts over the course of the week. And last week, hang on, and I'll bring up the results from last week and show them to you. And you can, of course, look at these yourself. Just contact Valerie and she'll make that happen for you. Okay, last week, 58 total alerts issued. We start Sunday night, 6 p.m. Eastern. We don't take our foot off the gas until Friday afternoon, 5 p.m. Eastern. 58 alerts issued, 8 never triggered, 2 carried over. We had 48 actionable alerts, and of those 48, 7 were stopped out. That's 14.6%. Again, there's no set number of alerts that will be put out each day. Some days see 2 or 3, and I think some days we've seen 15 or 20. If I scroll up to the previous week, which is going to take some scrolling, the previous week, week 53, there was a total of 103 alerts issued, 19 never triggered. That left 84 actionable alerts, of which 15 were stopped out, so 18%. And again, this information is freely available to everyone, so get with Valerie and she will share with you as much as you want to see. What markets do we deal with? We deal with all of the E-minis, S&P, Dow, Russell, NASDAQ, also crude oil, also gold, copper, the euro, British pound, Swiss franc, Mexican peso, natural gas. Whenever I see opportunity developing anywhere in the global futures markets, you can anticipate an alert. This just ends so far this week, and I'll show you what this week looks like. If I can scroll down, scroll up, how about that? Okay, we're on week 55. I switched it up this week because for 2-3 weeks in a row, the first alert of the week on Sunday night, which was the S&P, got stopped out. So I switched it up this week and went with crude first. When you see a thumbs up, that means price found its target. When you see a red X, that means it was stopped out. This was that Bitcoin futures carryover from last week. So thumbs up, found the target. The Z's means it never triggered. And the red X means stopped out. So far this week, I just got the numbers in from Valerie. She takes care of doing the recap. And it says, hang on, I know she just sent it to me. Which makes it seem odd that I can't find it. Here we go. So far this week, 23 total alerts, 20 actionable, 18 found the price target, 2 have been stopped out so far. So Alexa, 2 divided by 16. Alexa, stop.
16 is 0.125.
Alexa, stop.
10%
There we
is
go.
our stop out rate.
There you go. All right, so 10% so far this week. All right. Murray, in answer to your question, we currently have a trial underway for Logic 247. Get with Valerie. You can call her 949-42-EMINI. Email her at support@cfrn.net. And if you have Telegram, we have a client support channel in Telegram. So Mahmoud, I think I've answered all of your questions. If you have any additional questions, please post them into the chat box and or, reach out to Valerie. With that, let me just go over the numbers real quick. I got a little bit of news, but I'll give you that when I come back. Let's just go over the numbers real quick from around the world. Cash markets, starting here in the U.S. Currently, the Dow is down 26 points. NASDAQ is down 3. S&P 500 is down 5. And the Russell 2000 is down 7. In the commodity basket, crude oil up 2 cents, trading 56.23 last. Gold up $3.20, trading 15.1480 last. In the Asian markets, at the close, Nikkei posted a gain of 114 points. Shanghai lost 3, and the Hang Seng lost 60. So far, we have no movers and no shakers anywhere. And in European markets at the close, FTSE down 64. That's almost 1%. DAX down 64. And for the DAX, that's half of 1%. And the CAC finished the session down 26 points, which is exactly half of 1%. That gave us a mixed day in Asia, a red day in the UK, and so far it is a big red Radio Tuesday here in the US of A. Let's go to Michael and get a recap of everything that happened in the live training room today, and then I'll be back. We'll go over all the alerts so far this week, in particular the ones from last night. We'll talk to John, all that, and answers to your questions when I come back.
Okay. I got it. Excuse me.
It's all yours.
Okay, you should be looking at my screen. Yes, you are. Excellent. All right. Good afternoon, everyone. Today is Tuesday, the 20th day of August, 2019. Today, well, any day. If you want to take a free trial with us, go to the homepage at CFRN.net. Right over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. When you click on that, it will be brought to this page, which you can go to directly if you want to. It's called Emini Training School. Click on 1 week free trial, and down here, all you have to do is put in your name, your email, your phone number, and you can tell us about your biggest trading challenge so we can tailor the one-on-one training specifically for you. Okay, hit the send button and you'll be sent all the information you need to get into the live training room. All right, now the spreadsheet. We had a really good day today. Probably our best day in a very long time. And I was totally not expecting it because we didn't have any news events. I was expecting it to be a really quiet day. But if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 20th day of August 2019. Today we made 10 ticks in crude, 10 ticks in gold, and 40 ticks on the ES. Okay, though. And 40 ticks on the ES. That put us at plus 700 on the morning session. Today, it took 8 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract. And we took a total of 15 trades this morning. So on the month now, we're at $4,966. That's over 14 days, averaging $354 per day. On the year, now we are at $22,517. That's over 148 days, averaging $152 per day. Okay. So here, let me put this back here like that. There we go. Now let's go take a look at what we did and didn't do. All right. This is gold. All right. Now in the gold, we didn't miss too many trades today. I know that. We got most of them. We started out here with a break even in gold. And then we picked up 10 ticks right here to get the goal for the day. Okay, then I just had break evens the rest of the time. I missed this one. This would have been, maybe a tick or two profit. This one, break even. I missed this one, which would have been probably a break even. And hold on. Here we had another break even on the gold. And this is during the break. So during the break, we had one momentum long trade right there and another one right there. And there's nothing here where it is right now. Okay. Wow. Crude. Got all jumpy during the break. We'll get to that in a minute. Okay, this is the euro. Now we missed a trade right there in the euro. That was toward the end of the session. And it didn't give anything else. Well, actually, it bounced off the BBC right here, but it didn't put in a higher swing here and continue the trend like it needed to do. Okay. So we really didn't get anything there. And that was it on the euro. It just didn't give up many trades today. And crude oil. Can't wait to see this. Okay, crude started out, you know, it was dropping, but it wasn't giving us any trade setups through this. Okay, and then it changed directions. We missed a long trade right here that probably would have been a break even. We picked up 5 ticks there. We missed a nice short, right? Nope, that's not a valid short. It was going down. Okay. We picked up 5 more ticks here to put us at plus 10. Then we had a break even right there. And then we get into the break, and let's see what happened during the break. Had one trade right in here, one long trade right in there. Okay. Now the ES was our big moneymaker today. I know you find that hard to believe, but the ES was our big moneymaker today. Let's go all the way back to the beginning. Yeah, we missed a couple of trades here on the ES. That would have been a profitable trade. That would have been a profitable trade. Then we had a break even. Then it turned around, but it didn't go anywhere and didn't give a trade setup either. This should have put in a lower swing right here, and it didn't. That's why we didn't short off the BBC. And it got down into the weekly trading zone. Started changing directions, came back to the zone, and then finally we picked up 8 ticks there and 4 ticks there to put us at plus 12. And then 12 ticks here to put us at plus 24. Break even. 8 ticks there to put us at plus 32. 8 more ticks to put us at plus 40. And then we get into the break. And during the break, it looks like there was a shorting opportunity off the BBC right here. Okay, after we broke that dynamic support. Then another one right here. And another one right there. And another one right there. So it was, the ES was very tradable today. Very tradable. And there's a couple of momentum trades going in right through here. But we ended up with plus 40 on the ES today. That was our big winner for the day. Let's go back here to the spreadsheet. We'll go through this one more time. Today is the 20th day of August, 2019. We made 10 ticks on crude, 10 ticks on gold. I did those backwards, but I made 10 on each. And 40 ticks on the ES. Put us at plus 700 on the morning session. And today it took 8 minutes and 3 trades to get to $100 per contract, which is the goal for the day. And we took a total of 15 trades this morning. So on the month now, we're at $4,966. That's over 14 days, averaging $354 per day. On the year, we're at $22,517. That's over 148 days, averaging 152 per day. Now, if you have not taken a free trial with us, go to the home page at CFRN.net. And in the right-hand column, it says 5-day free trial applied.cfrn.net. Click that, and you will be brought to this page, eminitrainingschool.com. You can go directly to the eminitrainingschool.com page if you want to, and all we ask for is your name, your email, your phone number, and you can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Okay, hit the send button and you'll be sent all the information that you need to get into the live training room for 5 luxurious days. Okay. Okay. Yeah, with that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay. Dwayne must not be ready yet. Mahmood, what time will the alerts be sent out for the customers? Well, they're sent out all day long. That's why it's Logic 24/7. You know, whenever Dwayne sees the opportunity, he'll send out an alert. The ones for today came out about a half hour ago. Well, the ones so far for today. Okay. I am checking this. Yeah. And go down to the bottom. 11:56, 11:53, 11:52, 11:51, 11:50, and 11:49 so far today. Okay, there was one at 8:20, one at 2:25 a.m. But all those times are Eastern. Okay. Crude's tanking. And we encourage the questions, from everyone. All right. All right. I am still here. Yeah, I finished up a minute ago. So you can take the charts if you want to. All right. And I don't see John out there yet.
I haven't talked to him today. All right, here we go. Okay, recap of the recap.
Today it took 8 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract. For no news day, we had probably our best day in a year.
Yeah, speaking of news, let me take a look here. We've got Jackson Hole Thursday and Friday. I suspect that'll create some volatility, if for no other reason than speculation. People speculating what's going to happen. All right, so so Wednesday, high impact news events. In the U.S., we have existing home sales. That's due out at 10 a.m. Eastern tomorrow morning. Then at 10:30, as every Wednesday, we have crude oil inventories. And then at 2 p.m. Eastern tomorrow afternoon, we'll get the FOMC meeting minutes. So everything that was said behind the closed doors, we'll get a hard copy of that. And it can bring some volatility to the market, which is a good thing. And then as we roll into Thursday, those of you who trade the London Open Thursday morning. Watch out, 3:30 a.m. Eastern. You've got German manufacturing PMI coming out, and that is a high impact. And then at 7:30 a.m. Eastern on Thursday, ECB publishes an account of the monetary policy meeting, which is the same thing as our Fed notes minutes that I just explained. And following that, Thursday, 9:45 a.m. Eastern, we have manufacturing PM. Oh, that's not a high impact. Scratch that. Only looking for the high impact stuff. Next high impact event will be 10 a.m. Friday morning. Fed Chair Powell speaks. Now he's speaking during a trading session, which is a little unusual. I guess this has to do probably with the fact that he's in Jackson Hole. Okay, so that's going to be a big one to watch. Friday morning, 10 a.m. Eastern. And then also at 10 a.m. Eastern, we have new home sales. That's Friday morning, 10 a.m. Eastern, high impact. And that is it for the week. And I don't see anything coming out of China late Friday night or Saturday. So there you have it. So it is a news light week. News light. Okay. Light news is better than fake news, so we'll take it.
That is true.
All right, guys, let's take a look at the Concierge Trade Alerts from last night. Do this, grab whatever it is you grab to do screen captures. And if you want to capture my screen as soon as I drag it up, you can do that. Now, as Michael was giving the recap, and he explained at the end when I asked for a recap of the recap, he gave you the amount of time that it took and the daily goal. Okay, what we teach is a daily goal of $100 per contract. Daily goal. Gross. Now, I understand everyone goes, well, you know, that's great, but I can't pay my bills on $100 a day. Most of us can't. What we believe in, our philosophy, more contracts, not more points, is how we see solving the market equation. S&P is very liquid, crude very liquid, gold, whatever it is that your budget or dream dictates that you need to earn on a daily basis. That can be done with 2 points or 20 points. Now, that in and of itself sounds a little odd, but it's true. The difference between the 2 points and the 20 points is the number of contracts traded. In order to take 20 points out of the market instead of 2 points out of the market on any given day, well, we're talking 10 times as much. So your skill level as a trader probably needs to get bumped up tenfold. I know that, you know, many in this audience are just getting going. You're just now learning to be consistently profitable in the market. And the thought of what you know right now and taking that out tenfold, that might give you a headache. Now that of course is one way to skin that cat, poor cat. Everybody talks about skinning the cat in this business, but you know what? Last time I saw the cat, he still had a skin. Go cat. All right. Now, the market makes available on almost any given day 2 points, multiple times, over and over and over and over. We'll just use this S&P chart here as an example. The session began last night at 1800 hours. That's going to be right there, that big green candle. That began the current session we're in. Now, as I posted in the channel last night, the natural flow for today's session, sideways to higher. As you can see, we've mostly seen higher, okay? Now, I'm going to bump this down to just a 5-minute chart. Most folks are familiar with 5-minute chart. And we're going to back it on up to last night. Fly past it. Still searching. All right. The 19th at 1800 hours. August 19th. 1800. Okay, so that's going to be right there. We opened, I guess we opened on this candle. So we opened at 29.21 1/4. And we put in a low at 29.19 half. Just about 2 points right there. Now, from here, we go from 29, we'll call it 29.20 to keep this very conservative, 29.20. We run up to 29.23. There's 2 points down, 3 points back up. From this swing high at 29.23, we drop to 29.17. So 6 points. And then from 17, we jump up to 19, a couple points. And from 19, we drop to 17, a couple points. And then from 17, we run up to 24. So that's 7 points. Now, at this point, we're 4 hours into the session. 1800 hours last night, 6 p.m. Eastern, up to 2200 hours. And that's the Asian session. That's the sleepy session. From this swing high up at 29.28, we drop down to 29.25. It's 3 points. From 29.25, we run up to 29.31. That's 6 points. From 29.31, we drop down to 29.25. 6 points. I think you get the idea. And we haven't even got to the London Open yet. Once we hit that London Open, you're going to see some bigger swings. 29.28 down to 29.22, back up to 29.28. Important prices, important areas are almost always tested. There you have it right there on a naked chart for all the world to see. And then as we start heading into Wall Street Open, all right, here's 8:30. We drop magnificently from 29.28 all the way down to 29.08. So there's a 20-point move. All right, that helps me make my case. You had this opportunity and this one 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 to extract 2 points from the market. Okay. Then the market actually gave you a directional move that would have allowed you, if you got in at the top, if you sold the top and bought the bottom, which is kind of hard to do, but people try, a directional 20-point move. Now, since this is a business based on probabilities, is it a higher probability that you could take 2 points out of those 20 different swings we just looked at? Or are you astute enough, is your skill level such that you can ignore those, keep your hand off the mouse, wait for this bad boy, and then capture your 20 points? Can this happen? Sure, it did happen. How many days will you be in the right place at the right time to make sure you take advantage of that possibly one directional move of the day that covers that much distance? Obviously, the higher probability is with you being able to just select one of those swings, grab your 2 points for the day. Now, if you're trading with, as an example, one contract, 2 points a day, that's $100. On a 5-day week, that's $500. Over the course of a month, it's $2,000. Once you bump up to even 2 contracts, it really changes the landscape. because now you're looking at $200 a day. On a 5-day week, that's $1,000 a week. On a month, and of course we have holidays, we're talking about, somewhere around $4,000 a month. That's with just 2 contracts taking 2 points a day out of the market. Now, everybody talks about taking 2 points a day out of the market. You'll read it everywhere on blogs and articles. But the conversation always stops right there. Everybody knows it's an awesome idea, but nobody ever tells you how to do it. Okay? That's exactly what we do is we tell you, we show you, we explain, we coach, we mentor until your eyes start to see what we see. Your mind starts to think the way we think. That's the whole goal. So again, you can throw caution to the wind and try to snag that 20-point move every day, or with 1 contract, or once you've become consistently profitable and earned the right to trade 10 contracts, now all you have to do is capture one of those small 2-point swings with the 10 contracts. And guess what? It's the same dollars. So based on probabilities, you've got to decide which is the higher probability for you to find the financial freedom that you seek from this business of trading. John, welcome to the show. Glad to have you with us.
Hi. Thanks. Yesterday I think we mentioned that the gold opening lower and reversing higher looked like the lows might be in, and I think you endorsed that as well, talking about a kind of a double bottom. Mm-hmm. Look, the gold stocks have really taken off today. They reversed dramatically off. I think they opened down a bit again, and they took off over the last couple of hours.
Let's take a peek at Royal Gold.
Royal Gold is right back up there, right? I mean, if you'd bought the dips that we've pointed out, since it pulled back the first time to close to 100 or 109 or something, then shot back up, and then went to 119, shot back up, and then this time went down to the low 120s and shot back up. It looks extremely strong, this stock. And
there it is on a daily chart.
Yeah, I mean, look, we could be in a first wave upwards. That upswing since May really is kind of a wave 1. This could be a double 1-2. We could go into a third wave to the upside here in the next few weeks, because I think the gold market
that gap sitting right there, it's still there.
No, it's very, very bullish. And by the way, we did talk about the stock market. We can go back to that shortly, but while we're still on the gold, this is a double 1-2 of enormous potential. You've had a very powerful first wave here, and this thing could go vertical. And what would make it go vertical? Probably $200 move to the upside, or maybe a $300 or $400 move to the upside, right up to 19. And it's starting to look that way. The silver.
There's gold on a daily.
Yeah, it's not entirely out of the woods just yet, but it looks like it could.
Here's silver.
It could. Look at the silver. I mean, it's looking really strong, and breaking above that 17.5 could really cause the silver to run up to 19 pretty quickly.
Remember, we talked the other day about the potential to have a series of inside days off of this.
Yeah.
This I got to say, this candle was a bit worrisome for me, but the market's managed to hold.
Well, if it overcomes it, it's very bullish.
Yes, if it does, yeah.
And the silver has more of these 1-2s in it, so we really could get a situation where there's virtually almost limit up days in silver. We mentioned this in the have a look at GOLD, Dwayne. Put up GOLD.
All right. Hang on. I know what you want.
If you can go to
It's
a
the,
monthly
you want the
on that one.
ETF, right?
No. Actual Barrick Gold. Barrick Gold Corporate.
Oh, you
What's
want?
now?
Oh, you want Barrick Gold? Okay, hang on.
Yeah.
Okay, got it. And you want it
Okay,
on?
look
You
at
say
that. Look
monthly?
at this chart. Is it like bursting forth here or what?
It is. Yeah, it's ready to take out the top of this chart for sure.
Yeah, and I mean, it's got an island. Remember the island bottom we pointed out right down at 12, and then these breakaway upside gaps. I mean, this thing looks very, very bullish. Now, if you go to a weekly,
A weekly, yes, right here. There we go.
and then a monthly. I'll go into the monthly. Well, just look at the weekly there.
Well,
It's
yeah, I mean,
really
you
powerful.
can imagine the trend line that comes right down through here.
Yeah.
We took
Yeah.
that thing out. We put in a low. We put in a series of higher lows right here. See that?
Yeah.
Low, low, low. This is reverse head and shoulders right here.
It really is.
And we've
yeah.
already taken out the neckline.
And now go to the monthly, and it'll shock you, this chart,
Okay.
as to how bullish it could be.
Wow. Yeah. Yeah. That'll quicken your
So-
pulse.
Yeah. So it's the upside on this thing could be exponential. And have a look at put up ICE.
Okay. Intercontinental. Okay. That's monthly.
Look at that chart.
That's pretty potent.
Yeah, I mean, these are leading the markets higher. Look, if we were going into a recession or the end of the world, these stocks would not be making new highs because the market volatility and all the market action in gold and everything is helping this stock. And look at CME.
Look at that.
Yeah,
Wow.
pretty awesome. I mean, it looks like there's a lot higher to go in these. Why wouldn't there be? With the level of trading in the New York Stock Exchange, which is owned by ICE, and the CME, and then the CBOE is another one. Probably benefit a lot from Bitcoin too in the last few months.
Yeah.
So
Here's the CVOE. Yeah, that thing's ready to launch.
uh-huh.
I really like this from 125 up to 135.
Yeah. So maybe we can go to the S&P now. Just
This is the cash market, folks, the index itself,
Yeah.
not a derivative.
yeah, if you could, that's can you go to the weekly on that? Oh, before you do, or you just did it?
No, I can pop it back.
Yeah,
No problem.
it's just,
There you go. There's monthly again.
yeah. Remember the 2016 bottom? Look at that double bottom. You see the doji there, the doji reversal.
Right here.
Okay, yeah, right. Now go to and look at what happened. Right, that was the beginning of the
Sure.
10,000 up move in the Dow. Now go to the weekly.
I'll just point out, guys, this candlestick pattern that's represented right here, that's called the Japanese term. It means woman with child. And supposedly the higher she carries the child. See, she's the red candle, and the little baby, the papoose, that's this candle. And the higher she carries the baby, the more bullish the move. So there you go. The Secret Life of Candles. Google it. CFRN. Okay, go to what? Weekly?
Yeah. Now look at the weekly here, double foot. Now, it's a little.
All right, guys, everybody get a chance to grab your screenshot of the concierge.
Yeah,
Alerts. Go ahead.
it's definitely going to take some effort to continue higher off this possible bottom, and there is a risk of this thing rolling over still. But I guess what usually happens with these quality bottoms when they appear, and this is a fairly rare one, is the higher the market goes, the better the bottom looks, and
Yeah, right.
that brings more buying. So we're not out of the woods just yet, but I think if you go to the daily, well, sorry, stay with that for a second.
Okay.
You know, so we talked about this before. I think this 29. You know, we had a big 3-4 here over a couple of years. We obviously had a kind of a third wave right up into 2018, and we've had we had a wave. B wave made a new high, very bullish, and then we had the C wave down into the 19 bottom, and now we've had a new impulse wave, which I believe could be, look, it's a 1-2-1-2 of a fifth, right? So a double 1-2, very bullish, showing up in the gold as well. Could mean a literal eruption to the upside from here. Not necessarily right away, but fairly soon. Could see if we get a kind of a vertical eruption, then I would say would tend to confirm that we're in some sort of a third wave, possibly a third wave of a fifth. What would that mean? Well, given that this might be the beginning of the fifth here, this 1-2-1-2. Why wouldn't it be? Because a feature of this bull market since 1975 is the first wave. There's been a lot of 1-2s, a lot of big 1-2s and small 1-2s. And when the third wave gets going, it's always surprised on the upside. This is kind of this bottom here is reminiscent. You've seen in 2 years an ABC formation that actually looks like a smaller version of the peak in 2000, right? But then we had a sharp correction into 2002. Then we went up to the 2007. Then we had a riveting decline, C wave. And then out of nowhere came the 2009 to 2011, which would be equivalent of the first half of 2019, right?
Right.
So the fact that this is copying previous action in this market is incredibly bullish, because it's been a feature all the way since 1975. There's been a lot of times when the market has done similar things. So having had this ABC correction over a couple of year period, and has started a new impulse wave, potentially a fifth wave. Look, if this is the fifth wave, has taken 9 months so far, eight months, let's say, almost 9 months. So that means that if we're starting a third wave here, we could go another 9 months with a third wave. Well, generally the third wave can be 1.6 times as large, so that'll take us to about 15 months. Would take us right into the election. So, this thing could really go a long way, right into the election, possibly making new all-time highs. And then there'd be another 3-4 sometime going into 2020, and possibly a fifth of a fifth going into 21, which is, 21, 22 is our top for this market, as you know, because we're expecting problems in the early 20s, big problems. So in terms of timing and the whole thing starting since 1975, it really looks like we're in the final upstage of the greatest bull market ever right now, and you can sort of literally see it before your eyes unfolding, and it probably has a blow off top of some significance coming that would take us into 21 or 22. So it's going to be interesting to see how this thing plays out. And it could get very strong, because look, remember a year ago, by the way, we said it yesterday, maybe you can go back and look at, let's go back and look at August of, you can see it there, August 2017. Was right about there. You only had a small pullback. Yeah, and then we had this massive up move. Right. Mm-hmm. Well, since we're coming off a much larger kind of a formation here, and we've made a bottom in August effectively, we could be looking at something, another blow off situation very similar to August of 2017. So. And look, it's not that big of a deal if we run into some sort of a top in 2020, whether it's in the first quarter, second quarter, third quarter. It's probably not the economy's, the economy is going to be at a peak 9 months from that top. So if we were to top out in early 2020, actually would be just what the doctor ordered. You'd probably have maximum economic benefit going into the 2020 election. So remember that, look at that high a year ago, right? Or just a little bit less than a year ago, when we made that high in 18, and here the economy, the big surprise that might still be around the corner is that the numbers improve on the economy in the coming months. That would probably give the market the confidence to go much higher, especially if the economy got stronger on lower interest rates.
Right.
Now at some point the Fed might have to, look, 2020. If they lower rates a point or more before the end of this year, they're probably not going to do anything in 2020, i.e. raise rates, unless there's a real emergency. So you probably get through all of 2020 without any rate hikes. It's going to be a pretty good, pretty supportive of the market.
Yeah, I wrote about that last week. That not only do we have some incredible conditions right now for trading. I know investors are nervous. Is the market going up, going down? Traders really don't care if it's going up or down as long as it's going somewhere. Now, we don't believe in the whole sky is falling philosophy because these indices that we trade are best of breed. When one of these companies, part of the S&P 500 or the Dow 30 or the Russell 2000, if one of those companies gets sick, if they miss their numbers a time or two, they will be shown the door and a fresh, strong bull will be brought in to sit at the table. So over the long haul, the indices, S&P, Russell, Dow, NASDAQ, they're always going to go higher. Will there be pullbacks? Yes. Will there be people running in the streets trying to convince you the sky is falling? Yes. But all that represents is an opportunity to buy something that you know is going higher, because that's how it's built, at a lower price. Go ahead, John.
Sorry. You're dead right. Look, we've seen this before. We've seen these kind of pockets of weakness that come, as time goes on, the market may succumb to the economy may succumb to what happened from October through December. It might be a 3-month weakness in the economy. Might come in over Christmas or going into the new year, but then it could strengthen up again in 2020. Because look, if the bottom was coming into 2019, beginning of 2019, you've basically had the biggest up move in the market in history, right? For the first 5 months or so of the year, call it 7 months if you like, going into where we are right now, 7 or 8 months. In 9 months' time, which is go in the middle of 2020, the economy could start to pick up dramatically based on the move up in the market. So that's actually going to augur well for Trump going into the election. And as long as we hold up, and look, the economy can go down, but the market can go up. A lot of people don't realize that, but it tends to happen a lot.
Yep.
So,
anything else you want to cover, John?
No, listen, I better wrap it up, but thanks very much.
Take care. All right. Okay, guys, back to where we left off. Everybody had a chance to grab a screenshot of the alerts from last night, the concierge. So let's get after them. Okay, these are last week's zones that you see on the chart. Partners and passport holders receive the zones every Monday morning, 6:15 a.m. Eastern. I share them with the entire CFRN community every Thursday. It would do you well to just jot them down on Thursday because you can use them the remainder of Thursday, Friday, Sunday night, Monday, Tuesday, because there's carryover effect. Okay? All right. 1800 hours, the alert. Hang on. Last night's alerts got out at 6:25 p.m. Eastern. I always try to get the concierge report out before 9 p.m. Eastern. Now there's two types of alerts. The first one we're going over here is the Concierge Trade Alerts. It is a static report. The numbers are good for the entire session. The numbers are based on prior price behavior. The Logic 247 alerts, those are dynamic, in the moment, real time as opportunity presents itself. You'll see the alerts appear in the Telegram channel. Those alerts are based on current price behavior. When you have two different fingers pointing at the same thing, prior price behavior and current price behavior, it bears a second look. So last night we were looking to be long the S&P 500 E-mini futures at 29.34. That would be right here. Okay. Also, we wanted to be short at or below 29.10. If this looks like two lines in the sand, that's exactly what I would hope you would see. Two lines in the sand. From here and above, we're only interested in long trade setups. And from here and below, only interested in short trade setups. Everything in between is the market trying to make up its mind. I always want to do exactly what the market's doing, but I want to do it after the market has made up its mind. Okay? We have swing low at 29.04 and a quarter. So that's 5 3/4 points. Points available. Okay. Now, important prices, important areas are almost always tested. The fact that price triggered, pulled back up to a previous weekly trading zone last week, today's only Tuesday, and has consolidated for 1, 2, 3 hours, comes as no surprise. For us, the next high probability move, even though we're printing a green candle right now, which is why we would not take any action right now. But until proven otherwise, for us, the next high probability move would be leg, retracement, leg. Okay? Second time we trigger, or third, is when we would start looking to this area as a trade 2 type of target. Okay? We talked earlier about traders got to make a decision. Are you going to try to get some large number of points every day, or are you going to train yourself to simply take a couple points out of the market each day on average consistently, right? And that's a huge key right there, consistency. We all want consistent results from the market. Few of us, at least in the beginning, give the market a consistent effort. See how that sends the market a mixed message? Right. So we'll talk more about that. I talked about it quite a bit yesterday on yesterday's show. So if you missed yesterday's show, you can always listen and watch the archives at youtube.com/CFRN. And of course, during the live broadcast, you just throw the /live onto the end of that to get the live stream. If you are listening and watching via the live stream on YouTube, I don't have that chat box open. However, you can use the chat box on Telegram, okay, the discussion group there. If you need access to that and you don't have it, just get a hold of Valerie, 949-42-EMINI, support@cfrn.net. Only one of three things happens when price encounters a weekly trading zone. The most likely thing is consolidation, and that's exactly what we see right here. Okay. As I come across other examples, there's three things. I'll show you good examples of what those other, see right here again, it's consolidation. Over here, it's consolidation. Okay. Two lines in the sand. For those of you on the trial, you have access to the Concierge Alerts. I post them in the discussion group channel. What you can do, whatever markets you watch, as soon as the numbers come out, put your lines in the sand, sit back, wait for the market to come to you. And just keep in mind that this is the market making up its mind. The die is now cast to the short side. Triggered, market gave up 5 3/4 points. Retraced to an area that we would expect to be good resistance. Even gave us that beautiful doji with the wick sticking up above. Doesn't get a lot better than that. Now, I'm going to layer one more thing on top of this, okay? If you're on the trial, you have access to the indicators. I encourage you to download them, put them to use, put them to work. Otherwise, your trial just won't have the same impact. You won't fully understand how these 4 different elements come together to give you the highest possible probability setup. And there we go. We had a bearish cross right here. Price gets below the green line, which we call the BBC. Just means if price is above it, we're bullish and anticipate higher prices. If price is below it, we're bearish and anticipate lower prices relative to the time frame being observed. Okay? So when price pulls back, we get a leg and a retracement. On this retracement, we expect price to pull back to the BBC. It did. When price approaches the BBC from below, we expect it to be good resistance, and it was. Now, I just said the same thing about this weekly zone. When price pulls up to it from below, we expect it to be good resistance, and it was. We have 2 things here, not just one, but the pullback to the zone and the BBC at the same time. I think I said doesn't get much better. It really doesn't. From the open of this candle right here, I anticipate, for me, for us, for our methodology, our narrative, the highest probability move from here is to come down and trigger this Concierge Trade Alert again. Important prices, important areas, almost always tested. In order to do, there is one obstacle in the path of the market right there, okay? Now, because it's red, it doesn't create that much of an obstacle. If this were blue, definitely a flag, and as opposed to entering here, you might wait until we close below that, but it's not blue, it's red, okay? Remember, red is bearish, blue is bullish, okay? So once we pass through this obstacle, see, we had a 30-minute low there, a 30-minute low there, and now the obstacle is there, same spot. So it's an important spot. We want to see it close below that. Now we have nothing in our path, no obstacles. We go down, we trigger this 29.10 again, okay? And then our eyes are on 29.05 because that's now an obstacle in the market's path. The market creates its own obstacles. We saw very good support at 29.05. Support came in at 29.05. Buyers ran it all the way up to 29.19/20, right? Okay. So we got to get past this obstacle. Then we trigger. And then a potential 5-point move down to these lows right here. You might even be watching 29.06 because in case buyers come in early. So from 29.10 to 29.06, that's 4 points. I'm not suggesting that you just bail because you got 4 points on the screen. Although if your goal, please hear me, if your goal is only 2 points a day, if that's in your business plan and your trading plan, wow, you just did it. On your way to doing something else, while the market was on its way to do something far more grand, you hitched a ride and snagged your goal for the day. If price is truly serious, it will take out these lows. What could happen as we approach the lows, buyers do come in, they do bid it up, and as all of this is unfolding, the BBC's coming down. So as buyers come in about here, they managed to push price up to here. And this green line is now extended down to like this. And the next high probability move, bang, trade to target. If this is how the market finishes up this move from 29.10 down to 2900, it's a 10-point move. The market already gave you 4, okay? That's what the market made available. What you do with what the market makes available is entirely up to you. Remember, Mark Douglas, who we have a lot of respect for, in his book, Trading in the Zone, there's a section devoted to teaching you how to make sure you pay yourself as the market makes money available. Okay? All right, let's push on. Take a look at the Dow. Last night's Concierge Trade Alert for the Dow. Consider being long at or above 26165. Swing high was 26198. So from 26165, come on down. 26165, okay. We ran up to, well, from 65 to 95, that would be 30 Dow points at $5 per point on the Dow. 30 times 5, $150 per contract traded. Now, that's 150. What if your gold's only 100 a day per contract? Would this fit the bill? It would. Now, important prices, important areas are almost always tested. So price gets back below that trigger, takes off again. This time it goes from 65 up to 80. Okay, so that's a 15-point move. All right. Now, on the short side, and there will be days when you get what we call two-sided action. It's a term I learned from my friend Mike Reed, who I have to get a hold of today, and I hope we can get him on the show this week. Consider being short at or below 26055. 26055. That's pretty close. Swing low, 26015. So from 55 to 15, that's 40 Dow points at $5 per point, $200 per contract traded. Now, once you've passed the test, qualified to go live with one, increase your account balance by $2,000, add your second contract, that 100 a day becomes 200 a day. Not with extra points, not with more trades, not with additional risk. It simply becomes 200 a day because you've earned the right to trade two contracts. That second contract you add, it's underwritten, paid for with profit you earned in the market. It's the most incredible opportunity to grow and scale a business without having to turn to outside financing. Fueling your own growth from inside. It's a phenomenal concept. In most industries, it's unthinkable. But here, it's very much a reality. And it is the best way for you to grow your business. One step at a time, on a solid foundation. When you go from 2 to 3, you earn the right to go to 3. And then you earn the right to go to 4. And then you earn the right to go to 5. And with the liquidity available in the S&P, the Dow, gold, well, not so much the Dow. I mean, there's plenty. Oh, here, let me just show you. In the last 30 minutes on the Dow, which is not a high volume contract, but in the last 26 minutes, we've traded almost 3,000 contracts. Right? So volume's not an issue, but the true high volume contracts are S&P, crude, gold, euro. Always something to trade. Beauty of futures. We don't care if the market's going higher or lower. We just need it to be going somewhere. And with the contracts I just mentioned, there's always someone available to take the other side of your trade. You want to get short? There's somebody that'll sell it to you. You want to get long? There's somebody. You need to get out? There's somebody there. If you have experience trading equities, you know that sometimes sitting on the bid or the ask can be a lonely business because there's no one to match it. The market maker can't match you up. And another beauty of futures is there is no market maker. It's a purely electronic market. FIFO, first in, first out. If you're trading one contract, you get the same respect as the guy from Goldman Sachs trading 1,000. He doesn't get to cut in front of you in the line. No. You earned your right to be in that line because you showed up. And there's no cutsies. All right? So here we go. Lines in the sand. Two-sided action. Could have got that goal for the day here. Could have got that goal for the day here. Now, this is another example from Mike Reed. Do you know what a prairie dog is? Well, I've seen them in the cartoons. Little fellow lives out in the desert. And they burrow down, so they have holes, and they'll stick their head up to see what's going on before they just come waltzing out of their burrow. So picture, if you will, a little prairie dog. And this isn't exactly how Mike uses the term, but you'll get the mental picture. Sticks his head up, looks to the left, looks to the right. Conditions don't look good, so he ducks back down. Sticks his head up again, but not quite as far this time. This time he barely just peeks over the edge of his little hole, right? Comes down here, sticks his head out, back, sticks his head out. See how this was a swing high, lower high, and a lower high. Okay? This was a low, a higher low, and a slightly higher low. Okay? And the market's back into that spot, straddling a weekly zone from last week. Again, trying to determine what sort of a commitment the market is going to make, because so far, this is a directionless market. These are some of the most dangerous markets to trade in. A lot of people are afraid of the days with the wild swings of 10, 20, 30 points. Oh, no. You can harness that. You can manage that. This, you could die the death of 1,000 stop outs here. Okay? Not saying you can't trade inside of a range. You can. But it's not anything I put out as an alert. Okay? Because I only want to give our traders the highest possible probability alerts to work with. Okay? Let's go to Russell. All right, last night on the Russell, 1522 to the upside, never got there. On the short side, 1500. Okay, we triggered that. Doesn't look like by a whole lot. $1,500 and the initial swing low, $14.99.90. We went one tick over the line. There we go. You can see it. This is why God invented hard stops. Okay. Now, this drawdown is only about 6.5 points, but at $50 a point, that's $300 per contract traded. On the Concierge and the Logic Alerts, we do not recommend risking more than $300 per contract per trade, because if it costs more than that to find out if your narrative of the market is valid, pass. Wait for the second or third trigger. It usually represents less risk and more profit potential. Okay? Or you just wait for the next alert. Again, that's the beauty of Logic 247. It's a constant stream, a constant flow of alerts from Sunday afternoon, 6 p.m. Eastern, till Friday afternoon, 5 p.m. Eastern. Now, the truly talented, big shot traders, right, the ones I guess we all want to be, who work on Wall Street or work from an undisclosed location for a hedge fund, they don't spend 80% of their time looking for the next high probability trade setup. Retail traders do, because what else are you going to do? You see, the guys at the hedge firm, they have analysts. The hedge firm hires analysts to do the looking, to find the high probability trade setups, to put them in front of those talented traders, so that the talented trader can do what they do best, and that's trade. The average trader spends 80% of their time looking for the next trade setup. That's 4 days out of a 5-day week, 80%. These talented traders, one of the reasons for their success is that they're able to devote their time to trading and not looking. Now, of course, you could hire your own analyst to do exactly what the analyst at the hedge fund does, but it's kind of tough on the budget starting out, because a good analyst will run, mediocre analyst will run you about $175,000 a year, plus benefits and vacation pay and health insurance and all that jazz. Just not doable for most retail traders starting out. That's where the Logic 247 comes into play. Say goodbye to looking, start trading. Focus on your strength. Focus on what you do best. When you're ready to trade, you turn on notifications, Everything that's built up in the pipeline since you last signed off is waiting for you. Every time you turn it on, you got workable inventory. You'll have alerts that came out while you were away that have triggered. You'll be checking to see if they're ready to trigger again, because important prices, important areas are almost always tested. There will also be some that have not yet triggered. You'll get those on your radar. While you're working through your inventory, I like to call it, while you're working through your inventory of trade setups to see where you stand with each one that came out while you were away, high probability that some new alerts will come dribbling out the end of the pipeline. And so you just scoop those right into your workable inventory. Okay? This way, when you sit down to trade, you're able to trade and not spend so much time looking. That creates an awful lot of time that you can now spend with your family, pursuing your hobby, sharing the gospel, whatever it is that you do, enjoy doing. Go do it. Live life. Logic 247 works around the clock, so you don't have to. That's a good thing. All right. Again, on the Russell, 1500. Swing low so far on this, second, could be third trigger. We got a low now at 1498. Yeah, 1498. It's a couple points so far. Well, where's it heading? Well, it's heading here. Okay. Price is always trying to get to a weekly trading zone, either the one above or the one below. And once you are able to clearly see what the market's objective is, you just climb aboard, go along for the ride. You and I aren't tall enough, pretty enough, fast enough, or we don't have enough money to move the market. We can, however, figure out what the market's doing and move with it. So the high probability to move from here is down to this zone. Now, does that correspond to a zone this week? 87, 88? Really close. So, in fact, it's just below this zone, so that makes me even more comfortable saying it's coming here. Okay? Now, let me show you this. You see, this has nothing to do with any gimmicks or parlor tricks or secrets your broker doesn't want you to know. None of that malarkey. This is the truth about trading, and it's all very logical. Hence the name, Logic 247. And indicate. So what happened here? Bearish cross. Price pulled away. Price pulled back to physically touch the BBC. Down close. Sell the open to the next candle. And here we sit about 6 points lower from the open of that candle. Okay. All right. Remember, if you have any questions, let me drag the chat box back up so I can actually see it. Alan, what was the main idea that made you think correctly the next leg of the ES would be down? Let's go look at that. I'm sorry I didn't see the question sooner, Alan. What made me think that this next leg would be down? Well, we had a bearish cross. Price pulled away. Price pulled back to the BBC, as it always does. Price always reverts to the mean. I expect the weekly trading zone to be good resistance. I expect the BBC to be good resistance when we approach from below. And as this candle starts to print red, price is always trying to get to a weekly trading zone. So if it's leaving this zone, that means it's trying to get to this zone. So in a nutshell, that's okay. Thank you very much, Alan. I appreciate that. You're always very kind. Okay, NQ, guys. Let's take a look at this real quick. All right. NQ. 77.57 on the upside. So we never tagged to that. And on the short side, 76.82. Swing low, 80.50. Okay, so there's another one. Now, let me show you this. Whatever market you're trading in, whatever your favorite market is, maybe you got a couple, or maybe you understand the concept that if you know this trade setup, you can apply it to any market, any time frame. Any market, any time frame. So we have a bearish cross right here. Price gets below. Now, from the beginning of this swing, which would have been right here, this individual swing. See, that's a swing right there. Leg, retrace. Leg, retrace. Leg, retrace. Leg, retrace. Okay. So from this swing high here down to this point at 76.82. Let me draw a line there. 76.82. Right about there. Okay. So what was the swing low of that? 80.50, right? So like a point and a half. Now, from 77.48 to 76.80, that's about 60 NQ points. Now, market structure is always important. When I put this out last night at 6:30 Eastern, remember, none of this could be seen. You only had this to work with. As the market was developing and getting ready to trigger, got a 60-point swing here. If you know what the average swing in a particular market, like the S&P, I share that with you guys all the time. Average swing in the S&P is 3 to 5 points under normal conditions, right? Once you get beyond 5 points, a couple things to think about. Am I getting into an extended move? And if so, does that put me on the wrong side of the street, profitable or unprofitable? I'm not saying I would not have taken this short. What I will say is that as I'm triggering, if I triggered, my thoughts would be, okay, I just dropped 60 points. There got to be a bounce coming here somewhere. It takes no financial commitment to wait. Zero. Testing the waters, you get stopped out, okay? That's it, that's all. That's as painful as it ever gets. You get stopped out. That doesn't define who you are as a trader, as a man, a woman, no. It's just another trade. Until we as a trader learn to put these trades in their place where they belong, not where they, consumer life and we're hanging on for dear life by every tick. That's no way to live. I don't care how much money you're making. That's no way to live. You have to be able to find peace with this. This requires some self-discipline, a measure of faith. Yes, you got to sit up and pay attention and participate. You got to do all the things that you're supposed to do, but you have to learn what you have control over and what you don't. You have the ability to analyze and read a chart as I teach you, develop your own narrative as to what the market is currently attempting to do, and then take action without reservation and without regret. We all find it very easy to say, oh yeah, I know, there'll always be stop outs. So if we do know that, why does it feel like a mule kicked us in the stomach when it happens? When the very thing that we know is going to happen, happens, why do we get all butthurt? Sorry, the French. Why? Because we're human. And it's part of why 9 out of 10 people fail. Because no one ever taught them how to get over themselves. I'll try to help you best I can. But you see, while Michael and I can provide you with indicators, strategy, methodology, weekly trading zones, the one thing we can't give you, no one can give you, you can't beg, borrow, buy, or steal it, is self-discipline and self-control. And the good book speaks very highly of both of those things. Really, that becomes between you and God. God's never going to move the market for you. And I've explained the reason why many, many times. He can't. It goes against the very nature of who he is. But can he, by the power of the Holy Spirit, can he help you develop self-control, self-discipline, the ability to deal with negative conditions, be under fire, and live with grace? You bet he can. Allow God to do the things in your life and in your trading that he can and will willingly do. Don't waste his time or yours begging and pleading and praying for him to turn the market and screw every other trader on the planet so that you can get your points on your one contract. You know, come on. Think it through. Think it through. He wants you to be successful. He wants to bless you, not because you're just so cool. He wants to bless you so that you can be a blessing to others. That's a novel thought, yeah? Right, no. He wants to bless you so you can be a blessing to others so that they can be a blessing to even others. And each time we're a blessing to someone, each time we're given an opportunity to speak truth into their life, we get an opportunity to do what he called us to do. Point people to him. And when they find him, we're called to disciple them. This goes deep, but I came here to trade, not preach. So let's move on. Crude oil. Alerts came out right about here-ish. And they said, long at or above 56.50. Looks like we put in a swing high. 56.60 on the nose. Oh, yeah. Okay, it's 50. Here, let me show you. See crude there? 56.50. Okay. Well, I ran up 10 ticks to the tick. Right? So, $100. Oh, there's that $100. Okay. On the short side, 55.40. Okay. Because of the sideways movement here, you know, we don't have any big swings in this session. 55.40 down to 55.20. So there's a $200 per contract move. There's a 55.40 down to, there's a $100 per contract move, and there's a $200, a second $200 per contract move. That is correct. Lines in the sand. You see how price has gone, we've seen two-sided action on a number of markets, but then what does price do? It goes right back in between those lines because it's still not sure, still not certain, still making up its mind. God, give me the patience today to wait for the market to make up its mind so I can get busy and be about my Father's business. All right? All right. All right, we'll hit this one last one. Gold. On gold, consider being along at or above 1517. Market very cagey today with these moves. Swing high 1518.80. So from 1517 to 1880, that's $180 per contract traded. And on the short side, 1500, haven't even come close. Okay, triggered once, triggered twice, triggered three times, but the market just, it can't break out of this area. We saw it. We see it there on gold. Same thing on crude. NQ. Russell. Dow. Here comes the Dow again. The S&P. They were down to the trigger again on the S&P. Okay. All right, let me run through these logic alerts. I won't pick each individual one apart. I'll just kind of show them to you. And then you can get with Valerie if you want more information. Week 55. Last week, week 54, we had 58 total alerts. 8 never triggered, 2 carried over. That left 48 actionable alerts. 41 found their target, and 7 were stopped out, or 14.6%. Okay. Sunday night, Globex opened 6 p.m. Eastern. We started out with a long on crude. We're in the November contract now. Thumbs up means we found the price target. An X means we found a hard stop before we found a price target. And when you see the little Z's coming up, that means it just never triggered. We were waiting on a pullback to 25960 here on copper, and it just never pulled back that far. Okay. And then there's more crude and the Dow, the Russell, and the NQ. There's gold, S&P, Dow, NQ, gold, crude oil. Stop out on the Dow. Thumbs up on the S&P. Still open. NQ short. Russell short. There's crude. And there's gold. Okay. So again, Valerie gave me the statistics a little bit ago. And I think she said we were at about 10%. Stop outs, yes, 23 total alerts this week, 20 actionable so far. We still have 3 days left, and today. 18 found a target, 2 were stopped out, and she said that works out to 10%. So, if you have any questions, put them in the chat box, because we're going to do the good word for the day, and then we're going to skedaddle. Let me just show you the daily chart real quick on the S&P. Leg and a retracement, a leg and a retracement. Yesterday we talked about as price hits this BBC. Remember I said we're at good, potentially good resistance here. And I put this little arrow here. What do we expect? The next logical move for the market to make. It's going to try to get to this low, then it's going to try to take out this low. We had a low, we had a higher low, and we had an even higher low. Does that mean this will only perhaps make it down to this blue and climbing CFMA1, find good support and turn around? That's a possibility. If we can get below this, Next obstacle in our path is this swing low. Next obstacle, this swing low. And then back to the lows of June. That's not a forecast. That's just the highest probability thing to happen. You see, in order for the market to do something different, it would have to do a lot of work. We'd have to close above the BBC. And then we're going to run into resistance right here at the previous bearish cross. At that price, there will be resistance. Got to get through that and then hold it on a pullback and then run to challenge the all-time historic high. So whatever it does, we already know what we will do. That's every situation that appears in the market. Once you've been through our training, you'll be able to sit and look at a chart and you will know, based upon what we teach you and the tools that we give you, you'll know what the market is trying to do. You'll know what the next high probability move is. Does that mean you'll never get stopped out? Far from it. You will get stopped out. The best trader on the planet, whoever he is, gets stopped out. It's part of trading. It's like breathing, you know. You don't question, will you breathe? Am I going to breathe? Should I breathe? You're going to breathe to live. And if you're going to trade for a living, you're going to get stopped out. And you're going to learn to react to it with a modicum of grace. Not that weird freaked out look you get when the mule kicks you in the stomach because you just got stopped out 3 times in a row and it's not even noon. It's going to happen. No man, no machine, no algorithm, no crystal ball, no guru can prevent it. If they tell you they can, I'm sorry they lied to you. Yeah, but man's been doing that since the garden, right? We may not be sexy, but this is the truth about trading. All right, let's go to that good word for the day. Stand by. I have it on good authority that I have it right here. Yep. True that. We've been talking about how to solve problems over the last few days. Why not continue? How to solve problems, part 7. Ephesians 3:10. His intent was that now, through the church, the manifold wisdom of God should be made known. All right, our 7th solution. Try to see the problem from different angles, whatever it is. Get outside the box, right? Walk around. Look at it from all angles. Maybe it's not even a box. Maybe it's a paper sack or a plastic cup. Paul talks about the manifold wisdom of God. To understand the word manifold, think of a diamond. Each time you turn it, the light exposes a different facet of its beauty. God's wisdom contained in the Bible is like that. It exposes different aspects and approaches to the problem. There's a joke about a woman on trial for killing her 3rd husband. The trial lawyer asked, "What happened to your 1st husband?" She replied, "He died of mushroom poisoning." So he asked her, "How about your 2nd husband?" "He died of mushroom poisoning too." Finally, the lawyer inquired about her 3rd husband. "He died of a brain concussion." The lawyer asked, "How come?" She replied, "Because he wouldn't eat the mushrooms." Oh, that's bad, right? Seriously, most problems have many solutions, and no problem can long withstand the assault of sustained thinking. So fire up your God-given creativity, apply sustained thinking, and pull together your resources. Included in are people. People who need people, like you. Who else has solved this problem? Someone in your circle, somebody that you know, somebody that you trust, and maybe trust you. They've had to deal with this. How'd they do it? Often the problems that surround you aren't nearly as crucial as the people around you. When Joseph came up with a plan that saved Egypt from famine, Pharaoh said, Genesis 41, 39, and 40, Pharaoh said, "Since God has revealed the meaning of the dreams to you, clearly no one else is as intelligent or wise as you are. You will be in charge of my court, and all my people will take orders from you. Only I, sitting on the throne, will have a rank higher than yours." This young man thought he had a problem, which he did. And you see what God did here? Second in command. From the hoosgow, from the lockup, from the calaboose, to second in command. Here's the bottom line. With God's help, don't try this alone. With God's help, you can generally devise more than one way to solve the problem, whatever it is. Here's what I want you to do. Sit down today, take some quiet time, pen and paper in hand. You know you got problems, we all do. Why don't you write them, why don't you just jot them down, okay? Use that little quirky shorthand of yours so if somebody stumbles across your pad, they won't know your problems, right? Get them out on paper. Sometimes when we get stuff out of our head, get it on a piece of paper, black and white in front of us, we can start to emotionally detach from the disturbance, whatever it is. And as you look at this list of problems, things that are causing you perhaps to lose sleep, be agitated, aggravated, anxious, crabby, whatever. Ask yourself, okay, is there anything I can do to address these? Can I fix them? Can I start a process to fix them? Is there anything I can do? Because God expects you to do whatever it is you can do. He gave you talents and gifts and a brain. So I'm assuming, like most folks, some things on your list will be, well, yeah, if I just got off my butt and changed the light bulb in the laundry room, my wife wouldn't have to do the laundry in the dark. See, it's a problem because you don't like climbing up on that ladder and you really are trying to watch your program. But it's a problem that you can fix. So let's agree that whatever we put on our list that we can fix, we're not going to put it off anymore. We're not going to make plans to fix it. Just fix it. Change the bulb. Make the call. Open the suspicious envelope. Right? Now, there's going to be some things on the list that you probably can't fix. A loved one is sick, or, unless you're a doctor. Some of them are going to require God's help. I like to keep God freed up to help me with the stuff I can't do on my own. And the stuff that I can do, when it's my turn and He's ready to, send favor and grace my way, I want Him to see that I've already done the things I can do. And I've acknowledged that these other things, it's going to take the hand of God. And I'm relying and depending on Him. Oh man, His face just lights up. It does. I've seen it. Well, you know what I mean, right? All right. I'm done. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.